Now let's move to silver here. I'm sure we are all aware that silver stocks are not doing very well in dollar terms or even in silver terms, but I wanted to show you this chart. This is the silver price relative to silver stocks represented by the SIL ETF. It's not a great representation, but it's the best that we've got right now. And so we are at a 1 ratio, whatever that means exactly. We're at an all-time low of silver stocks relative to the silver price. And look what happened the last 2 times that we hit this level. Well, we have one here at bear market bottom in 2015, early 2016. And look at that. Right after we hit an all-time low, we hit an all-time high, or very close to an all-time high, very similar here. This was March 2020. And here, a few months later, we hit very close to an all-time high of silver stocks relative to the silver price. The all-time high was over here in late 2010 as silver was approaching 50. What's going to happen here? I don't know exactly, but I do know that the last 2 times that silver stocks hit this level, which includes our sponsor, Fortuna Silver Mines, symbol FSM, we promptly headed to an all-time high, or very close to an all-time high in silver stocks relative to silver.
Rafi Farber begins by acknowledging that silver stocks are currently performing poorly both in dollar terms and relative to the price of silver itself. He introduces a chart depicting the silver price relative to silver stocks, represented by the SETF, noting that while it may not be a perfect representation, it's the best available at the moment. The chart indicates that the ratio is at an all-time low for silver stocks relative to the silver price. Farber then draws attention to historical instances when this ratio hits similar lows. He points out 2 specific occasions, one during the bear market bottom in 2015, early 2016, and another in March 2020. On both occasions, shortly after hitting all-time lows, silver stocks surged to all-time highs or came very close. He also references a previous instance in late 2010 when silver was approaching $50. Based on this historical pattern, Farber suggests that although he cannot predict the exact outcome this time, buying undervalued silver stocks at this juncture could be a favorable move. He emphasizes that history serves as a guide and that this may be a great opportunity to buy undervalued assets, including Fortuna Silver, which is mentioned as his sponsor. Farber concludes by expressing confidence that, in the in-game scenario, silver stocks will not retreat from their upward trajectory because assets will be revalued in terms of silver as the dollar undergoes what he terms as its final plunge of death. This statement suggests a belief in the long-term bullish outlook for silver and silver-related assets, despite current market conditions.
So we have here a chart from 1970 to 1980. And the chart ends at December 31st, 1979 here. And so we don't see the final moonshot here from about 25 to 50. So from this point, silver doubled in about 3 weeks. So we have here 1975. Here's where Nixon took us off the gold window, took us off the last vestiges of the gold standard, and silver did not react very strongly immediately. This is about August 1971 over here, and we see silver heading down into 1972, but then it started to climb from about, let's say, $1.75 to a parabolic top of about $6.25. So that's 4 times, 5 times, close to a quintupling of the silver price. And look at that. All the silver stackers started to go into silver and say, oh my God, look at that. We're off the gold standard. Silver's going to moonshot. And then we had a double top here. This is very similar to what we saw in silver squeeze. Let's say this was the August 2020 top and silver squeeze was February 2021. So there's another parallel over here. And then for 2 years, silver headed down, down, down into 1976.
Rafi Farber delves deeper into the prolonged challenges that silver has faced, particularly since 2020, amidst unprecedented money printing. He references a chart spanning from 1970 to 1980, emphasizing that silver's historical behavior can offer valuable insights into its current trajectory. Farber acknowledges that despite the substantial increase in money supply, silver has remained relatively stagnant since 2020, prompting him to analyze historical parallels. He highlights the pivotal events of the 1970s, starting with Nixon's decision to abandon the gold standard in 1971. Initially, silver did not exhibit a strong reaction, but it gradually began climbing from around $1.75 to a peak of about $6.25, marking a significant increase. Farber draws parallels between this period and recent events, such as the August 2020 peak and the subsequent silver squeeze movement in February 2021, which led to a double top. Drawing from historical patterns, Farber underscores the prolonged downturn that followed the double top in the 1970s, lasting 2 years until silver reached a bottom in early 1976. This period of decline perplexed silver investors, who expected silver to surge following the abandonment of the gold standard. However, it took several years for silver to gradually recover and reach $625 again by 1979. Comparing this historical timeline to the present, Farber notes that silver experienced a similar pattern, reaching a high in August 2020 before undergoing a 2-year downturn until August 2022. He describes the current period as excruciating for silver investors, with silver struggling to surpass the $30 mark amidst resistance from the 250-day moving average. Nonetheless, Farber remains optimistic that silver will eventually surpass $30 again, drawing parallels to historical precedents. In conclusion, Farber asserts that while silver's response to extensive money printing may seem delayed, it aligns with historical patterns of gradual price appreciation following periods of stagnation. He believes that once silver breaches the $30 threshold again, history will repeat itself, leading to a significant uptrend reminiscent of past bull markets. Rafi Farber addresses the question of whether it will take another year for silver to reach its potential, emphasizing that he's not making specific predictions or adjusting his timeframes. Instead, he focuses on historical accuracy and precedent, noting the frustrations faced by silver investors in the 1970s, which he believes are repeating. Farber compares the 1974 high for silver of $625, which took 5 years to regain, with the 2020 high of $30 representing a factor of 4.8. Drawing from the historical precedent of the late 1970s and early 1980s, Farber extrapolates a potential target price for silver at the top to be around $240, assuming a similar trajectory. He acknowledges that this target price could be conservative, especially considering the current economic climate and the potential for the dollar to spiral out of control. Farber expresses the sentiment that while emotions may lead some to believe that the silver market is rigged or unfair, historical analysis indicates otherwise. Farber concludes by reiterating that while history doesn't necessarily repeat itself exactly, the patterns observed suggest that a significant uptrend in silver prices is likely. He emphasizes the importance of understanding where we are in historical context to navigate the current market environment effectively.